Good morning, one and all, and welcome to this morning's video. So this morning I have three pairs on watch, and those are Aussie Yen, Aussie Kiwi, and Natural Gas USD. Just before I start, just to say a thank you to the handful of YouTube subscribers that I picked up yesterday, as well as studying patterns on the markets. I'm also studying patterns within myself and patterns within all kinds of different things, such as my YouTube metrics. So patterns exist everywhere, and when you start looking for them in the markets, you find that you start looking for them everywhere else as well. But before I go too much down that rabbit hole, let's break these pairs down for you. So today, Aussie Yen is my favourite of the bunch. I'm not necessarily anticipating this shaping up by the end of the day, but I was just thinking, literally just before I went live, one of the places in trading that people get caught out is they look at the market and it looks slow and they think it's not going to be ready by the end of the day, and then before you know it, one impulsive candle and prices where they were anticipating or requiring it to get to, and then they get caught off guard because they've gone off and done other things. So it's easy to get caught out thinking the market's slow when it's correcting 80% of the time, but within one candle that can all change. So Aussie Yen, my favorite of the bunch. We have this high here. We have this all-time high, according to my data at least, and we have the near miss to it. That gives me a clue that at some point, especially when we move down like this, when we move down in a corrective fashion relative to how we moved up, that gives me a clue that we're going to tap into this all-time high, okay? As does the fact that we have a near miss to it there, and we have that this kind of structure. We have that reversal structure there that I was talking about yesterday and talking about in my videos over the past week or so. So we tap into that area. We do come up to that area, and we get this kind of reversal structure there. Do excuse the drawing, middle section, bit of a corrective move up, a little bit of momentum at the last leg, which is often what we see, leading up to an area of value. If the overall move has been corrective, we break just above, and then we impulsively move to the downside. You might be looking at this and thinking, well, surely this has reacted from here. Okay, surely this has reacted from here. Could this not be a move to the upside to come back up here? Well, you don't normally see when we break an all-time high, and especially when we break above, we don't normally see impulsive move down, correction, or an impulsive move up, unless the correction becomes very wide relative to the impulse down which has preceded it, and then we get that M-style pattern that I was talking about yesterday, where too much volume accumulates. So this just looks to me a little bit like a recovery, people taking profit and the market just consolidating for a bit. Okay, if we measure this, that is exactly a 50% pullback, so that's a healthy pullback for a move to the downside. And you can see that we moved up to this area, and then we had this very aggressive weekly follow through. That gives me a clue that we will likely, the aggression of this weekly that's broken below all of this consolidation gives me a clue that we will likely come all the way down to where I've got my target and perhaps move a lot lower to take out that wick. What happens after that remains to be seen. Okay, but as we drill down, you can start to see the little structures. Okay, so we have this, we have a little consolidation there, another consolidation, and then we have a reversal structure with the middle section, which retests the back end of that. Okay, we have a little correction there, which was above the low of this, so I wouldn't be looking to necessarily get in here because we're trading into that low unless there was enough risk to reward available. But we then break impulsively below all of this consolidation, and we've consolidated afterwards, and also it's a flat consolidation as well, giving me a clue that this is an impulse correction continuation to push lower to potentially take out that low, because if we measure it, we measure the impulse to the start of the correction, we take it to there. Usually the continuation leg out is of a similar length to the impulse which has preceded it. That would take us down to that area, so that makes contextual sense. Okay, and what I was saying about this being potentially profit taking, this pullback here, we have no business at this moment in time coming back up to the all-time high, because we've already broken above and then moved to the downside. So if this was a move to the upside because of this move up here, then what reason does price have to come back here if it's already tapped out all of the liquidity that was sat there? Okay, so that these are the questions I'm asking myself. Okay, so as we zoom in, I'm now looking at this structure here. So you can see that price didn't necessarily, we have this little scoop double top here, and it retests the back end of this. So price didn't necessarily need to come all the way back up to this area, but the clue for me that it might do, which is why I put this on watch and why I had what I forecasted today, forecasted when I picked my pairs over the weekend, is we came back up and we left a little near miss to this high, and then we left a little near miss to that high. So the more near misses we have, the more likely it is that price will, if it comes down, especially if it comes down in quite a corrective manner overall, the more likely it is to do this, which is exactly what it did, to come back up to take out the high that we near missed to, and then potentially retest the back end of this again, and then move to the downside from there, okay, to take out this low, which this low near missed to. So as I zoom in a little bit more. Now, the reason I said that I wasn't anticipating this necessarily to be ready by the end of the day is because one of the things I was looking at is the possibility that this is the first touch, or becomes the first touch, of a 1, 2, 3 into that area, okay? And already you can see we're responding from that area. So I wouldn't be surprised if this ends up being something like this. Then we push up to there. That then gives us the 1, 2, 3, which taps into that, and then we move from there. But we shall see. Especially, one of the reasons I'm saying that is because we have kind of had this impulse correction, okay? And as I said a minute ago, on the higher time frames, it's not normally the case that we get an impulse correction and then price just does that, but it can happen, okay? I'm not actually interested in a trade here at the minute just because of the near miss to here, and because I'm specifically looking for reversal structures, okay, or 1, 2, 3s which retest the back end of something, or 1, 2, 3s which lead into a hook point. And there's no reversal structure leading into a hook point here. It's just a consolidation, okay, which could easily do this, tag you in, tag you out, and then do that, and then do what I was talking about there. But I've got this on watch in any case, just to see what happens, because we don't know what the market is necessarily going to do. Okay, and we'll let this do its thing. This could be a little trap to trap people in, because if you look at this, it's not really responded from anything. Okay, so this hasn't really responded from anything on the left of any significance. And when that's the case, especially when this starts to become wide relative to the move down, it can be the case that we get this, we then get that, and then maybe that becomes the move up. But who knows? I'm not going to surmise. All I need to know is where my value area is, and that's there. Okay, and that's all I'm looking for. I'm looking for price to move into that area. And if it does, what I'll be looking for, before I forget, almost forgot what the forecast was. If price taps into that area, I'll be looking for a 1 hour impulse down below the area of value. Okay, and then I'll be looking for either a 5-minute continuation, and I'll look to get short on the break, or I'll be looking for a 15-minute continuation, and I'll look to get short on the break or within it. Okay, and what I'll do is I'd measure that range. I'd measure it from there to there. And what do you know? Once again, we have that little sharp move just above the 90% area. So I would set a take profit there, and I would trail my stop loss accordingly, because that is, as I've said, where price can pull back deeply, even if it's going to continue in the forecasted direction. Okay, so that is Aussie yen. So Aussie Kiwi. Okay, so Aussie Kiwi, if we just zoom out. So Aussie Kiwi, we have a high here, and we have all these near misses, these 2 near misses to the high, okay, giving me a clue that that's where the significant value is, and we get a reversal structure leading up to that area, okay. I am mindful of the fact, actually, just touching on it, that this was quite an impulsive middle section, okay, and when that happens, a lot of the time, what can end up happening, especially as this move has been quite corrective overall, this could be the middle section, which then potentially taps into that base there, and then we move up to tap into this high, okay, which this high near missed too. That's a possibility. Okay, so you have to factor these things in. But even if that were to happen, because we've broken above this high now and caught people the wrong side of the market, we could still potentially capitalize on a move down to this area, and then potentially a break below to give us that before that was to occur. So it doesn't mean to say that just because something might happen that we can't capitalize on interim moves in the meantime, okay? And if we just zoom in, you can see that we've broken below. So we have this correction here, we have the impulse down, the correction here, which taps into the back end of that, okay? We then move to the downside, we break below here, we come back up, we wick only ever so slightly above it, giving me a clue that there may be value there, especially when we come back up and we near miss to it, and then we have that kind of middle section there and this expanding pattern, okay? Also, the fact that we have a 1, 2, 3 leading up to that gave me a clue that we will likely tap into that area. I've changed my forecast ever so slightly on this, and I shall explain why in a second. So as we drill down, this is a bit of a subjective first touch, but nevertheless, we do have that 1, 2, 3 leading into that, and I won't be looking for a risk entry from the edge of structure anyway. So whether it's subjective or not makes no difference. We have the 1, 2, 3 leading up to it here. Okay, and yesterday I was looking for a tap into this area followed by a push down. However, one thing to note is yes, we potentially have another little reversal structure here, but when we have this much volume building just below an area of value, this is something I've learned, it's not normally the case. If we're going to move to the downside and we're going to get a flag that we can actually get involved in, it's not normally the case that we just move down from here, we get a tight consolidation, and then we just drop from there. Okay, when that happens, you'll often find yourself tagged in, tagged out. Okay, and then price breaks above. What I'm saying is when we have this much volume building below an area of value, usually if we're going to move to the downside, we will break above significantly before moving back in. Or if we're going to get the flag that we're looking for, we would break below all of this consolidation because this, and then look for a flag underneath there. Because a lot of the time, all of this consolidation, once it's broken out of, the volume being generated is what causes price to break above before breaking back in, as a lot of these people bail out their positions. Okay, normally we wouldn't see that much volume. So because of that, which I can't remember a time when I saw a push down from an area of value with all this volume sat just above where we've got a flag and then we're able to get involved from there. What I'll be looking for is I'll be looking for price specifically to break above. Okay, it may break by a more significant amount, but I'll be looking for a break above before, and then a break back in, and then I'll be looking for the same thing as I was looking for on Aussie yen, and then I'll be able to manage it down to here for something in the region of 1.39, down to there for something in the region of 3.5, and then what I would do is I would use the mechanical management tool, and once again we have that sharp move just above the 90% rule, so I'd set a take profit there while simultaneously trailing my stop loss for the reasons previously given. So that is Aussie Kiwi. Last up, and with just enough time to get through this, is natural gas. So as I said yesterday, nothing happens all of the time, and nothing happens none of the time. And where the amateurs, and I'm sure there's people in my YouTube comments, I don't read the comments in YouTube specifically to keep myself away from the kind of language where people say you're wrong. Equally as important is it's equally as important to keep yourself away from the kind of language where people say you're right. So both of those things, I apologize to all of you on YouTube that put good comments in there, but one of the reasons I stay away from the comments is specifically to distance myself from language where people say you're wrong or you're right, okay? Because both of those things are equally detrimental if you're trying to do this long term, okay? You need to be more probabilistic and more neutral thinking, okay? And it's not about the amateurs are trying to be right and the professionals are trying to manage risk. That is, in my experience, the key difference. Okay, so I'm always trying to remind myself I'm not trying to be right. I've no interest in being right. What I'm interested in is does the market. I'm interested in what I'm doing, not what the market is doing. Okay, so what do we have here? We have this high here. We have the near misses to it. Price tries to commit, but it doesn't find enough volume. I can't see anything on the left where we necessarily found volume from that we needed to push up to tap into. But regardless, we broke back above. Okay, we broke back above. You could argue that this was a bit of a a steep reversal structure, and then we see the impulse correction continuations to the downside. We then start moving in sequence. We have a structure here. Okay, we break just above. Bit of a straight, not really a middle section there so much, but and then we have, I touched on this yesterday, this is to me is looking like a reversal structure into this all-time low. So normally when we see an impulsive move down like that followed by correction, we normally get an impulsive move down which would replicate the previous impulse. However, that would take us into negative equity. That would take us miles below the all-time low, which doesn't really contextually make sense. So what this looks like to me is that price is forming some kind of reversal structure to tap into that area where the bigger players would likely have their orders, discounted prices down there, and then that would give us that reversal structure. So what I'm potentially trying to do here is I'm trying to capitalize on the last kind of move down to that area to give us that reversal structure. Okay, and then what happens after that remains to be seen. I would anticipate probably price stalling in this area for quite a while as the people try and get on board. These all-time lows and all-time highs I see as major train stations, and at major train stations, price will often consolidate in those areas for a long time, collecting the passengers, as it were, for the next move to the upside or the downside. If we just zoom in, so yesterday, so the reason I was looking for trades from this high here, and that will be a bit more visible on the 4-hour, is because this high was above this low. So we didn't necessarily need to come all the way back up to that area before the move to the downside. Okay. However, as I've said, nothing happens all of the time and nothing happens none of the time. So there was always a possibility that could happen. I just thought it was less likely based on my experience because that high was sat above here. Okay. But just doing this on the fly, you can see that if we do push up to that, that's still a healthy correction because that will be still, around about a 50% pullback or just shy of it. Okay. So if we just zoom in, so where I had my ray line yesterday was here. And the reason I touch on that I'm not interested in being right is because, so we had that high there, the sharp move that was below that high, and we had a reversal structure suggesting liquidity there, which lined up with it. Okay. However, what happened? Price pushed down. We didn't get the continuation that I was looking for. So there was no trade for me. Okay. If we just look at this on the 1-hour, price did not give the flag that I was looking for. It looked like it was going to at one point. I thought we were going to get something like that, but we didn't get it. Okay. So I didn't need to be right. All I needed to do was know what I was looking for. And because we didn't get that, I didn't get involved. So there's nothing lost. So what I did is I took that off the chart because obviously price did not find enough liquidity there. We still have that reversal structure, but we've kind of broken out of that. We may have, the reason I'm looking at the value area above is because we may have this kind of structure, this reversal structure pointing the way up to this area of value here, especially when we can see this on the daily chart. Okay, that stands out on the daily chart. Maybe that's one of the reasons why it's gravitating there, because that is more visible on the higher time frames. So therefore, more eyes will potentially be paying attention to it. Okay. So what are we looking for in this instance with all that considered? So I've adjusted my sales when the wind changes direction, which is what the amateurs are not doing. They're clutching at this being right mentality. Okay. And if they get it wrong, they will stick with their original bias, a lot of them, rather than adjust their sales, okay, like the professionals are doing. Okay, so what I'll be looking for in this instance is I'm looking for a tap above this new area of value now, and then I'm looking for a push down and a flag. I'm looking for either a 5-minute continuation or a 15-minute continuation. One of the reasons this is lower on the list is the fact that I don't like the fact that so much that this has broken out of the original structure that we had there. Okay, so potentially this could be forming something more complex, and one of the reasons it might be doing that is because on the higher time frames the initial impulse down kind of responded from nothing. Okay, that's just a theory, but if we get this, then I'll be looking to get short on the break or within it, depending on which flag it is, and then I'll be able to manage it there down to there just about for something in the region of 1%. And then what I would do is I would set a take profit. I'm going to run out of time here, but my target would be down there, and I would set a take profit at the 90% area while simultaneously trailing my stop loss. Okay, thanks for watching, folks. I hope you've enjoyed this, and I'll see you again in the next video which will likely be made tomorrow. Have a great rest of your day.